Hello, everyone. Welcome to our webinar today. We're just going to get started in about a minute or two as people come in. And so just hang on with us and we'll be with you shortly. Thank you. Okay, welcome everyone to another Mass Cultural Council and Data Arts webinar. My name is Michael Ibrahim, Program Manager within the Cultural Investment Portfolio at the Mass Cultural Council, and I oversee our advisory services. And I'm so excited to bring back Joanna Reiner Wilkinson to our session. This is our third session of our Data Arts webinar, so we're happy to wrap it up today with a special session for board members. And so just some ground rules before we get going today. Joanna's content is about 45 minutes, and then we'll have about 15 minutes for a Q&A. We are recording this session right now, and this will be available starting tomorrow. You will get an email from me when this is up on our YouTube channel. You can always check out the Mass Cultural Council YouTube channel anytime to check it out on your own. But Joanna is also going to be sharing some resources and, of course, the slide deck from today's presentation. So no need to scribble everything down quickly. We've got you covered in that area. We do use the Q&A feature of our webinars. So if you do have questions, of course, we'll have time for questions. We'll save them to the end. But if you want to type them in the Q&A box, not the chat, but the Q&A box, I will organize them and then we'll have a nice conversation afterwards. If you have some technical difficulties, you are free to use the chat and send me a message. But otherwise, Q&A is our friend for that. And without further ado, I'd like to turn it over to Joanna Reiner Wilkinson.
Thank you, Michael. Hello, everybody. It's great to be here. I am the Senior Financial and Education Associate at SMU Data Arts, and I'm glad to see so many of you here today. Before I even get started with this webinar, I just want to acknowledge that we are in the middle of some challenging circumstances, both as individuals and in our roles at arts organizations. And I'm heartened by the fact that so many people seem to be taking this moment to really dig into the meta side of their organizations and try to improve internal systems. I'm going to take that as a small silver lining, but I really miss being with all of you in person, and I'm glad to be able to connect with so many of you remotely. Please note before I get started that all of the information I'm sharing today is for board members of new organizations or unaudited organizations or organizations with small budgets, and really for folks who are less familiar or completely unfamiliar with nonprofit financial management. So the material I'm about to present is basic on purpose. If you're not one of those people, you are completely welcome to stay, and I hope you'll be able to fill in a few gaps in your financial knowledge or think of a colleague who would benefit from watching the recording of this webinar that we'll send you tomorrow. So let's get started. There are lots of reasons to join the board of a cultural organization, too many to name here, but especially for smaller organizations, we tend to join a board because we're friends with the executive director or another board member, and we want to say yes when they ask us for help, or we're just passionate about the mission of the organization. And though you may join a board having little or no business or finance experience, understanding financial information is key to fulfilling your board responsibilities. You need to know things like, will my organization recover financially from the pandemic? Or how much should we keep in a reserve fund? Or given the state of our world, should we move from an earned revenue business model to a contributed revenue business model? Financial data can help you answer questions like these and provide insight to help you make effective decisions. And there are multiple ways that data is used for financial management, ranging from how you keep track of data in the first place to the various reports you review at every board meeting. And we like to think of these different ways of using financial data as building blocks for financial health, tools, methods, and best practices you can use to help get your organization on solid financial footing and stay there. And today's session will focus on reading and learning from the balance sheet to give you insight into your organization's financial health, and learning how to analyze your organization's cash flow to help you with short-term and long-term planning. But before we jump into that, I know most of you know about data arts and the CDP, but for those of you who don't, here's a brief overview of my organization. So SMU Data Arts is a program of the Meadows School of the Arts at Southern Methodist University. And here you can see a little bit about what we do. We build capacity for data use in the sector, and that's what today's webinar is all about. We collect high quality longitudinal data for the sector. We develop data collection methods to respond to evolving sector needs, and we provide insights from the data that people can use. Here are our goals for today. So by the end of the session, I hope you will have a better sense of the board's role in managing and directing the financial health of the organization. I hope you'll feel confident reading and understanding a balance sheet. I hope you'll know how to analyze the cash flow of your organization. And finally, I hope you'll leave with some resources on these topics and more to explore with staff and board members. If you read any book or essay or blog post about board member responsibilities, you'll read that board members have fiduciary responsibilities for the organizations they serve, and these are often described as having the duty of care, the duty of loyalty, and the duty of impartiality. This workshop is really about the first of these, duty of care. What does that mean anyway? The duty of care requires a board member to pay attention to things, to be prepared for and attend board meetings, and exercise good judgment in decision making and have prudent financial management. I like what the organization Board Source has to say about fiduciary responsibilities and the duty of care. They say, not every board member can be a financial wizard. Every board member, however, needs to be a financial inquisitor. It is essential to understand basic terminology, be able to read financial statements and judge their soundness, and have the capacity to recognize warning signs that might indicate a change in the overall financial health of the organization. If a board member does not understand something, they must be willing to find out the answer. So this is what the duty of care is all about. The idea of board members. You must understand the financial situation of the organizations you serve, especially as documented in the financial statements, and use those in planning and decision making and setting policies based on this financial information. Now, unfortunately, we don't have time to cover everything a board member must understand about the finances of the organizations they serve in this webinar. So we're going to focus on one area in particular, the balance sheet, which is also known as the statement of financial position. Why focus on the balance sheet? As any member of the general public, especially those without financial training, will likely agree, the revenue and expense information contained on an organization's statement of activities or profit and loss statement is easier to digest at a glance. And for that reason, at many nonprofit board meetings, especially when board members may not have access to financial training before they join the board, it's easy to focus on revenues and expenses and never look at the balance sheet at all. but especially in challenging times like these when many organizations have temporarily halted work, shifted their programs, and even doubted their survival. It's the balance sheet that contains key information you need for board discussions, decision making, whether your organization is small or large, and whether your balance sheet is 2 lines and 1 column or 25 lines and 3 columns. Today, we're going to break the cycle and see what the balance sheet has to offer. So let's start by looking at an example balance sheet just to get oriented. A balance sheet is a snapshot of your organization at a moment in time. Usually, that moment is the end of a month, the end of a quarter, or the very end of your fiscal year. And while specific line items in your organization's balance sheet might vary, all balance sheets have a few elements in common. So, first, you'll find the assets at the top of the page. This is everything your organization owns, including the cash in your bank accounts, investments, the value of any property you own, the value of any inventory you sell, and for accrual basis organizations, any money you expect to receive in contributions or contract payments. Below the assets are your liabilities, which is everything your organization owes in bills you have to pay, loans, mortgages, etc. And at the bottom is your net assets, which is your assets minus your liabilities or your organization's net worth at a point in time. Balance sheets also contain additional information to highlight different aspects of an organization's financial condition. Most balance sheets are organized to highlight time horizon. When will the organization receive money due? Or how soon will it have to pay bills and other debts? And the lines themselves are arranged in what's called the order of liquidity, which is how soon will something be converted to cash. Generally, an asset section has two subsections: current assets, which is all of the money you have now and anything that will come into the organization within 1 year, and non-current assets, which are long-term items that you don't intend to convert to cash ever, like an endowment or a building or other items that will come in after 1 year. And liabilities follow the same idea. Current liabilities are items that are due in the near term within the current year, and non-current liabilities are items due after the current year. Balance sheets also highlight external requirements and donor intent by using restriction categories. So just as a refresher, unrestricted funds or board designated funds or any funds without donor restrictions are available for your organization to use at your own discretion. Restricted funds or funds with donor restrictions are specified for use for a certain project or during a particular time frame, or not meant to be used at all, but set aside to earn money for the organization. According to accounting rules, all audited balance sheets must show net assets or your organization's net worth by restriction category. This balance sheet in particular goes a step further and shows all of the assets and all of the liabilities by restriction category. At every board meeting you attend, and hopefully before the meeting, staff or the organization's treasurer distributes a package of financial reports. At minimum, these should be a statement of activities, a balance sheet, and some kind of explanatory memo with any item of note. The balance sheet for your organization may be brief. It may only be a couple of lines, but it should be the basis of discussions about the financial health of the organization. So let's start with how to read a balance sheet. What exactly are you reading for? When you get a balance sheet, do a first read through, get oriented, look at the numbers themselves. You want to check out things like, how much cash did the organization have in the bank? How much money is coming in soon? How much will the organization have to pay out soon? Which lines are the biggest lines on the balance sheet? And of course, are net assets positive, which is the thing you want to see. And then do a second read through of the balance sheet and think about the information in context. Hopefully, the financial statements you receive contain comparative information for at least 1 year prior, and if they don't, ask for that information. Look at the current set of numbers compared to last year at the same time and note any significant changes. If you're not sure why any of those changes happened, ask. Changes might be the result of something interior to the organization, like a staffing change or programming changes or buying a building, or the result of exterior forces like maybe a pandemic or maybe a timing change from when a grant maker said they were going to send you a check to when they actually sent you the check. And just as a brief aside, when you're reviewing a balance sheet or any financial statement and you see changes, please note that it is perfectly normal for numbers to change from year to year or for there to be slight variances from the budget when you're reviewing a statement of activities. As a board, you may want to set some thresholds for what percent change between years or between periods requires an explanation from staff so that you don't have to dwell on every single fluctuation at board meetings. And so explanatory information about these changes can be sent to board members ahead of time. And at board meetings rather, you can just stick to big questions that come up about significant changes. Another way of looking at the information in context is to think about the nature of the organization, what they have, what they do, and when they do it. Like, for instance, if you know the organization established an endowment over the course of the year or they bought a building, can you see that reflected in the numbers in the financial statements? Or maybe if the organization has steady year round programming, you might expect to see similar balance sheet numbers every month or every quarter. So when you read your balance sheet, is that what you're seeing or not? Or maybe your organization has seasonal programs. If that's the case, can you trace the arc of the season when you look at a balance sheet month by month or quarter by quarter? So the thing to do is read through the balance sheet. Think about what you know is going on at the organization and make sure you can read that story in the numbers. When I look at a balance sheet, my eye is always drawn to the top line first, cash. Cash is a simple concept, but nuanced at the same time. It is the most liquid of all of your assets because it's money that can be spent immediately. So when you look at your organization's cash, sure, you want to make sure that there is some, but you also need to dig a little bit deeper into that number and consider things like how much of that cash is actually available for use, or is any of it restricted for a certain reason? And is the amount of cash sufficient for the immediate needs of the organization and for the long term needs? The way cash moves in and out of an organization is essential for board members to understand so that you can ensure the organization will keep operating and be able to fulfill its obligations. So let's explore this concept called cash flow. Hilda Polanco and John Summers of FMA, writing for the nonprofit Quarterly, explain the concept of cash flow this way. They say cash flow is simply the mix and timing of cash receipts into and cash payments out of an organization's account. It is where the numbers on budget spreadsheets and financial reports translate into the reality of money changing hands, and as such is a very specific lens on the reality of a business model, one that takes into account not just what an organization's revenues and expenses look like, but when they come and go. Managing cash flow, therefore, is primarily a question of when we pay our staff, when this bill is due, when the grant payment will come in. And as there are many varieties of nonprofit business models, each one has a particular bearing on many of those whens. So essentially, This idea of understanding cash flow is understanding whether the organization has enough money to meet its obligations and do everything it wants to do, and whether or not that will be true through the end of the year and going forward. So, to answer this question about whether you have enough cash to meet your needs, you need information beyond the one cash line on the balance sheet. You need to do a cash flow analysis. Now, just this phrase, cash flow analysis, sounds daunting to me, but it's something you can do as part of the budgeting process. It may never be a fun task, but as a staff member or a board member, this information is critical. A cash flow analysis covers a period of time. It could be 6 months, a year, 5 years, or any length time period. And I'm going to show you how this works using a template created by FMA for the Wallace Foundation. And I'm going to share that template with you in the follow-up email to this session. Now, I know this image is a little small on your screen. It's a little hard to read, but do the best you can. I wanted the image to be as clear as possible. Know that the starting point of any cash flow analysis is always the cash balance on your balance sheet at the beginning of the time period you want to explore. So you put that into the template first, and then you add your budget figures, breaking down your annual budget numbers month by month. As you enter your projected revenues and expenses, these are called cash receipts and cash disbursements here. At the bottom of the template, there are formulas built in. The cash balance will update and let you know whether you have enough cash to cover your projected expenses on a monthly basis. Now, if you're using your own table or spreadsheet for your cash flow analysis, the way this works is every month you add the net number, that's revenue minus expenses, to your opening cash balance or the balance for the previous month to get your updated cash balance. Now, as you're entering data, whether it's into a template like this or a similar version or simply creating your own analysis, there are a couple of important things to note. So first, this analysis is all about cash coming in and cash going out of your organization. If yours is a cash basis organization, all of the items in your budget are cash items. But this is not always the case for accrual basis organizations. So, for example, let's say your organization applies for and receives a foundation grant. In some cases, the grant award letter may come with a check for the entire amount. But sometimes the check may arrive at a later date. And in some cases, the award is a multi-year grant where some of the funds arrive immediately and the rest in future years. But according to accounting rules, all of the revenue is recorded at once when you get the grant award letter, regardless of when cash is coming in. But for a cash flow analysis, you need to follow the path of the cash and record only the actual amount of cash coming in the month that you expect it. So after you add all of your budgeted items to your cash flow analysis, there are a few more things to add because it's not only revenues and expenses that affect your organization's cash. Several different types of transactions only affect the balance sheet. Even though these items may feel like revenue and expense transactions, they're actually not. And examples include buying major items of property and equipment, like a building or a vehicle or theater costumes and sets. Anything your organization intends to use for years to come that's valued above a threshold set by your organization. Buying these items mean that the property and equipment asset on your balance sheet goes up and cash goes down. Or maybe you take out a loan and then repay the loan. When you take out a loan, cash goes up because you've borrowed money. Now you have some, but you have a loan liability. And when you make payments on the loan, cash goes down and the loan liability is reduced. And I'll mention one more, which is deferred revenue. Sometimes your organization may receive cash in advance of earning it. The best example of this is a performance-based organization that sells tickets or subscriptions for shows a year in advance. When that happens, most organizations prefer to wait until the actual performances are running before counting the revenue so that each year contains the full financial picture for a complete season. Because there's always the possibility that the advance sale money might have to be returned. Maybe the season will get canceled. Even though the cash comes in, you record a liability until the next year. All of these items need to be added to your cash flow analysis, even though they're not revenue and expense items, they affect your cash going up and down. So add all of these into whatever template you use, and then see how your bottom line cash is affected. Now, we've just looked at a cash flow analysis, and I just want to mention that for some organizations, depending on the size of the organization, the staff might be responsible for preparing and doing this kind of analysis. Or if your organization is a smaller one and the board is doing more work, the board may actually prepare this analysis, maybe as part of the annual budgeting process. But no matter who prepares this kind of analysis, this sort of tool that helps you identify cash flow needs is invaluable for planning and decision making. So here's what you do. You fill in the template and look at the bottom line cash. If you notice in any particular month, or maybe more than one month, or maybe even the year as a whole, you have a cash shortfall, that means the board needs to work with staff and make a plan so you don't get into trouble. And that solution may be borrowing on a line of credit or any other kind of short-term loan. Maybe you want to work to increase your revenue by fundraising or raising prices for your programs or other means, or decreasing your expenses, or delaying payments on invoices, or trying to speed up payments due to the organization, or all of these things. Once you've set on a plan, use your cash flow analysis to actually flesh out these various solutions you come up with to see which combination will most effectively and least disruptively reverse the cash shortage. Now, in addition to looking at your cash flow for activities you already know are going to happen, the cash flow analysis template is also a great testing ground for things you'd like to see happen or to help keep you prepared in crisis situations. So, for example, if staff proposes creating a new position, you can add those salary and payroll tax and benefit expenses to your cash flow projection and then check the bottom line cash balance. That will let you know how much more cash you need to be able to afford an additional staff member. Or maybe your fiscal year ends in June. And though we think and we hope everybody's going to be vaccinated for COVID-19 by the end of the summer, you're still not sure whether to plan for in-person or online fall and winter programs. You can use the cash flow analysis tool to create two different scenarios so you know ahead of time how each would affect your organization. So once you have this type of tool in place and you've already gotten used to using it and adding in numbers, there's no limit to the scenarios you can create. The board might find it especially useful because unfortunately we know that the pandemic is not the only crisis we might face in the coming years. As you brainstorm, as you imagine that your biggest revenue source disappears, or that you may unexpectedly lose all your program venues, the cash flow analysis will help you figure out how long you have to put a solution in place before you need to close your doors. So, no matter what scenario you play out, the more accurate your data and the more well-researched the assumptions going into the analysis, the better equipped the board will be to have thoughtful discussions about what the organization needs to continue operations, to grow and be sustainable. So to that end, while you might spend the most time on a cash flow analysis while you're reviewing and approving the annual budget, and doing any other kind of short-term or long-term planning, it's always important to update the cash analysis tool or get an update from staff on a regular basis. So as the year goes on, replace the budgeted numbers entered for revenues and expenses that have actually come in, the actual figures, and then confirm your cash balance is accurate based on your internal balance sheet or your bank statement. Updating the template with actual figures will help you monitor your projected cash levels throughout the year so that you can always make adjustments as needed. In addition to using cash flow analysis to make sure your organization can achieve its immediate plans and short term goals, board members also need to think about long term sustainability of the organization. And part of being sustainable is recognizing that there might be times of shortfall and that you need to have a financial cushion and plans in place to counter emergencies. A financial cushion, which might also be called a reserve, might come in many forms. Now, these might be funds that are physically segregated in a savings account or invested in some way or held at a community foundation or more officially set aside as an endowment. Or the cushion might only be a calculated figure like a surplus or positive change in net assets number or working capital of a certain amount. However and wherever these funds are, there are a few things for boards to think about. First, how much do you actually need to hold in reserve? And how easily do you need to access all of these funds? Now, there's no one right answer to this question about how much you should hold in reserve, but unless you set an actual target amount, you'll never have a real sense of whether you've saved quite enough, and you won't be able to measure your progress toward reaching your savings goal. So to get started with this, at a board meeting, have a frank conversation about the things you hold dear, things you want to see continue, even if all other sources of revenue were to dry up. And then use your budget and your financial reports to put a dollar amount to that list of items. They might be things like the cost of running your most beloved program or all of your programs for a year. Or maybe it's the cost of paying your staff or your rent for a full year. Or maybe you think about what's 3 months of operations or 6 months of cash based on your cash flow analysis. Or maybe even it's the annual amount you receive in grants and contributions or anything else. Once you've set a target amount for your reserve or cushion, the next step is figuring out how to achieve that goal. Now, this may be no easy task, and it may even take years to do. So, the first step is take another look at your cash flow analysis. If you constantly have a positive cash balance, especially if that balance is at or above your target amount, you may be all set. If you have the funds in place to make sure you don't spend them, add a line to your cash flow analysis so that you examine your cash needs only over and above the reserve amount. But if you don't have the amount you want to hold on to in reserve, you need to work with staff to determine how you're going to build up that amount over time. Think about those things we mentioned before. You're going to try to increase your revenues by fundraising, increasing prices, cutting expenses, any and all of those things. Maybe you're going to do some specific fundraising to raise that target amount. If you do that, along the way, set a target date for raising the funds and set some milestones so you can monitor your progress. Now, going through this focus of looking at your balance sheet, becoming familiar with the organization's finances, digging into cash flow and building a reserve will give you the best sense of not only the organization's cash needs on a regular basis, but also how often and how easily the organization needs to access that cash. This information is key for board members to understand as other decisions come up, like should we keep renting or should we buy a building? Should we keep our savings in a reserve fund or a savings account, or should we establish an endowment? Should we accept a loan from a supporter to help with cash flow? These decisions are part of the concept known as capitalization, which is having the right set of resources or assets on the balance sheet in place to support the organization's mission. So let's take this question of buying a building as an example. So let's say that your organization is a small performing arts center and you currently rent your building. But a fellow board member heard about a similar building that seems suitable, that's for sale, and started a discussion at your most recent board meeting. Owning your own building would give you a permanent home for your programs, and it would take away any uncertainty about losing your space or dealing with unexpected rent increases. And it would give you maybe a potential money maker if you rented out the building to other people. As you discuss the matter, in addition to thinking about where the building is compared to where your participants live and all kinds of other logistical details that are really important, make sure to use your financial data and your cash flow knowledge to create a full financial scenario, taking into account the various aspects of the project, from the savings on rent expenses to mortgage payments to program and rental revenue increases to maintenance and security costs, all of that. And once you enter that data into your scenario, see how your cash position changes. Does something suddenly become negative where it was positive before? Is it the reverse? And then go on and create a few more scenarios. Maybe look at one where you buy the building, but no one rents the space. So you don't have any additional rental revenue. Or maybe there's a situation where you buy the building, but you discover that it needs so much renovation that you have to keep renting your current space at the same time. What will that do to your cash flow? How will then buying the building affect your ability to offer programs to people? And a final thought to add to the mix, always look at your current cash flow needs. Think about this. If you've faced recent cash flow problems and have had problems saving money in the past and have had to dip into reserve funds to keep operations afloat, you haven't been able to save any money, tying up capital in a building that requires care and that may be difficult to sell quickly if you need cash may not be the best solution for you. Part of this decision-making process that the board has to go through is deciding between the capacity increase you get when you own versus the flexibility you have when you rent. And you may be able to get a cheaper space at any time if you need that. So yes, doing this type of analysis, thinking about all of the elements, all the issues involved with buying versus renting, filling out that cash flow analysis, creating scenarios, it's a lot of work and you have a lot of what ifs. But this type of work is essential. You need to weigh all of the factors and make sure you use financial data to support your decision making at every step of the way. So today, and for the past 40-ish minutes, I've been talking a lot about cash flow and the balance sheet. And even though these concepts may still seem weird and foreign to you, unfortunately, I've only scratched the surface of what you as a board member can learn from and should pay attention to on this key financial statement. So we'll have to save some of those for another time. But before we end and before we get to your questions, I want to mention some overarching best practices for board members in relation to the organization's finances. So first, if possible, and especially if your organization is small enough to not have a finance person on staff or even a contracted bookkeeper, it's a good idea to have a board treasurer or at least one board member who has more in-depth understanding of accounting practices, budgeting, annual independent audits, 990, state filings, all of that. Next, train new board members in financial topics. The more educated people are, the more they are likely to participate in conversations and feel like they're making good decisions on the organization's behalf. And you want to cover topics like what is meant by fiduciary responsibilities, how to read financial statements, how to talk about money, what policies and thresholds does the organization already have in place. And if you're new to a board or thinking about joining a board, ask for this type of training. Get to know the organization by reading their financial statements and other official documents. The next one sounds a little awkward, but if you don't understand something, whether it's a financial term or why a number is really high on a financial statement or why a number is negative, don't be afraid to ask questions, whether it's in a meeting or in a separate conversation with the board chair or the board treasurer. There is no shame in not knowing everything about finances before joining a board. And asking questions about numbers doesn't necessarily mean that you don't trust the staff. It just means that you're doing your job as a board member. And if you're on the board of a small organization, the board may actually assist in doing the work of running the organization. They may take the place of staff entirely. If that's you, even though you're busy running programs as part of your job, make sure the organization has systems in place to collect and produce information the board needs. These may be simple systems like an annual budget process or basic accounting software or a set of forms for contracts, check requests, and expense reports. Or if you're on the board of a larger organization, you may need or want more complex tools like metrics or dashboards or this cash flow analysis we looked at. If the organization you serve doesn't have these things, speak up. If the financial statements you get seem to be missing information or they seem to be strangely formatted, don't be shy, ask for changes. And always make sure you understand the timelines connected to your board service. You need to not only know when the board meetings are, but how far in advance of each meeting you will receive reports. How much time do you have to review them? When you're going to receive the draft budget to review, et cetera, and so forth. Having these kind of proper tools and systems in place to monitor and evaluate financial performance may seem like a lot of work and not nearly as much fun or as interesting as talking about your audience or running programs. But in the end, these processes and working with all of this data only strengthens the board's capacity to do its job and ensure the financial health of the organization. So that was a lot of information in a very short amount of time. But before we go, I do want to share a few resources and tools that Data Arts has that offer you different ways to work with and gain insight into your financial data. So first, if you don't already do so, fill out a cultural data profile or CDP. And this has just been streamlined. If you haven't checked it out lately, it will look a little different than it has in the past. This survey is based on your final financial statements. And once you do your data entry, which is only once per year, your data can be a part of grant applications for participating grant makers like MCC and research reports offering insight into the national arts and culture scene. And then once you've entered at least 1 year of data, you have access to a full suite of reports that help you analyze your trends in a number of different areas and benchmark your organization to others. These reports allow you to have ready-made data and visuals grouped around specific topic areas for your board meetings. And we have tools to help you analyze your data, including the Kippy dashboard, which is a great conversation starter about all of the intangible things that contribute to your organization's success. If you want to learn more about using data in general, we've also developed a series of free online courses meant to help you learn to use data more effectively. And we have 4 courses currently available, and they cover specifics of how data can be useful in different areas of your work. The courses cover using data for decision making, financial data essentials, using data to build relationships with your audience and donors, and using data as part of your advocacy work. SMU Data Arts also publishes a lot of white papers. Our most recent paper is called The Alchemy of High Performing Arts Organizations. This was published in partnership with the Wallace Foundation. This research studies 10 organizations with a track record of high performance and 10 organizations who engineered a turnaround from low to high performance. Their successful strategies can be considered for replication or adaptation by others. And in late August, we held a community conversation with 3 arts leaders who were interviewed as part of this research to gather their individual insights and learn about how the COVID-19 pandemic impacted their organization. And you can watch that video. There's a link on your screen. We also have a number of other online videos available on our Vimeo page, and this includes excerpts of content from our data literacy courses, recordings of some of our training webinars, and videos about how to use our platform. And finally, I didn't actually talk about it much in this presentation, but all of our lives and our work and our sector as a whole are touched by the COVID-19 pandemic. And we still have much to learn about the full impact that the pandemic will have on our lives and the lives of those around us. SMU Data Arts is monitoring the impact of COVID-19 and working continually to gather information and share resources and advocate for the sector during this challenging time. And I highly encourage you to review our resources page. Stay engaged with us by reading our newsletters, follow us on any of our social media platforms, and learn how we're gathering and using data from arts organizations like yours so we can share how the pandemic is affecting our work and our sector as a whole right now. So with that, we have about 15 minutes left and the door is open and Michael will help me answer your questions. And please feel free to type in any question you have. It can be about balance sheets, cash flow, the material presented, or anything you have. We can try to answer it now or at least point you in the right direction.
Thank you, Joanna. Yes, feel free to use the Q&A function in Zoom to ask any questions really about financial and boards. We'll try to get through them. While you're thinking through some of the questions that you might have, I just want to take the opportunity to foreshadow a little bit about an upcoming very extensive series, what we call the Recover, Rebuild, and Renewal series to the Mass Cultural Council. We're getting ready to offer 40 webinars to the cultural field starting February 2nd and going through the end of June. These are based on conversations that we've had with a lot of cultural organizations in the fall about what's the information you need to make it out of COVID-19 successfully and resiliently. And so we are going to be focused on financial management, legal issues for arts administrators, board and governance, management, human resources, and advocacy. And so you will get an email from me when this is ready to open and to register. But I just wanted to highlight a few sessions that we're going to be offering. We're going to do some executive coaching for executive directors. We're going to be looking at employee self-care in support of mental health. We're going to look at working from home best practices, some deeper work into board training on finances and cash flow planning, kind of a next stage to what Joanna's content was today, adapting your business model post-COVID, understanding the full cost of all of your programmings, understanding the economics of partnerships and collaborations. Also, if you do have your workforce working from home, what's the legal considerations of having your workforce at home? Some basics on risk assessment concerns for board members, employment law, and then specifically on the board, we're going to look at the role of the board during times of stress, how to recruit and retain board members during this time, and how to motivate and support them remotely. Many of you are not doing your board meetings in person as you normally would. So how do we have successful and effective board meetings on Zoom? We're also going to be talking about virtual programming, online fundraising, conducting capital campaigns and strategic planning during times of COVID. So as soon as this session is ready to go, you will get an email. All of our sessions are free to any cultural nonprofit in Massachusetts, regardless of funding relationship with Mass Cultural Council. So be on the lookout for the Recovery, Rebuild, and Renewal series. So we do have some questions coming in. Joanna, the first one that I will present to you is, you talked about deferred revenue.
Mm-hmm.
Would deferred revenue apply to sponsorships for future programs and events?
It could. It depends on exactly the agreement that is made with sponsorship. So with deferred revenue, usually that's for future programs, because what you want to do is you want to put all the expenses and revenue for a given program in the same year. You don't want to have the revenue come in one year and the expenses for another year. So if the sponsorship is for a program that's happening later, you might want to defer that, but you have to look at the exact details of that sponsorship arrangement.
Okay. One of our attendees' organization serves as a physical sponsor for other small orgs that don't have their own nonprofit status.
Mhm.
What are the best practices or tips on keeping track of that in their balance sheet?
So that is very tricky. So for an organization that does a lot of fiscal sponsorship, um, a lot of the items you have are your own, but one thing you might consider is having columns on your balance sheet for the sponsees, I'll call them, or maybe one column for all of the organizations you sponsor. It's a good way to separate some of that information. But think about, before you even go down that road, from a balance sheet point of view, what of the balance sheet items belong to the sponsees and what are your own? Most of them are going to be yours. The thing that might not be all yours is money that you're holding for them. So you might want to have a couple of either lines or columns for cash in your bank account saying, this is my organization's cash. This is the cash that is getting passed through to the sponsored organizations. On a statement of activities, which has all of the revenue and expenses, you might want to do things a little differently. But really think about, from your balance sheet items, your assets, your liabilities, what exactly does belong to the sponsored organizations, and how can you separate that with lines or columns?
Great. Another question: does SMU Data Arts have a method or tool beyond the general cash flow analysis for evaluating the purchase of a building, i.e., something specifically for its analysis?
We actually don't. And I'll say that this cash flow analysis that I've talked a lot about, I wish that SMU Data Arts had created it, but we didn't. That was created by FMA, which is Fiscal Management Associates for the Wallace Foundation. They have a lot of great tools like this. And again, I'm going to share a link to the cash flow analysis with you. Unfortunately, we don't have a tool that's specifically for buying a building. So, what I did when I was talking about it is I looked at some typical financial statements and I thought about what are all of the lines and categories affected when you buy a building? What are all the ramifications of buying a building? And I listed a bunch in the presentation so you can see those in the recording. And doubtless there are more that I wasn't even thinking about. Like, if your building is bigger, does that mean you have to hire more staff or cleaning staff or snow removal, all of those things? So it's worth looking at all the categories and thinking it through. I don't know of a tool out there that helps you do that, but I wouldn't be surprised if the for-profit sector actually has something like that, because a lot of tools exist that help you decide, is it time to buy your own home or are you going to rent your own home? And it might be useful to look for one of those tools and see if you can adapt that to your needs.
Great. We have another question. Thinking about cash reserves, especially
Mhm,
during these times when the physical doors are closed, limiting revenue, are there
mhm.
any benchmarks that you know of, Joanna, that could be referenced for working capital, facilities, or other cash reserve needs, such as staff or thinking about the organization's anniversary in a few years?
Mhm. There are a lot of writings out there about what is the right amount of reserves or the right amount of working capital for an organization to have. And a general benchmark that I've seen a lot of is like 3 to 6 months worth of expenses. That's what you should have on hand. Now, if you're a smaller organization or if you're new to saving money, you might want to work up to that number in particular. But it's good to actually make a decision about what benchmark you want to reach, because especially if you have an anniversary coming up, usually those are moments to ramp up your fundraising and to use that to really put a push to put those reserves in place to get that reserve going and use that as a moment to say, we love our organization. We've been around for 50 years. We want to be around for 50 more years. And here's how we do it. So before you figure out your anniversary strategy, think about your goal. It could be anything. There is no rule. But one thing to do is think about, okay, we're in a pandemic. We have had to cancel a lot of our programs. You want to make sure you're able to pay your staff, rent your office space, or maybe not, because we're all working from home now. What do you want to be able to do if a disaster strikes, and how much does that cost? How long do you want to be able to survive if all sources of revenue are to go away? That's how you set a target. And you can come up with one methodology right now, and you can change your mind and come up with a different target number next year. That's all okay. But you want to think through what is the number and why that number is important, because you want to be able to support that number when you do your special anniversary fundraising. You want to make sure you can communicate to people why you need to raise this much money and how you need their help.
Great. We have a question. Someone was looking over their financial statements and see terms like depreciation and amortization on those. Can you make a brief comment about those two terms?
I don't know if I can say it briefly, but I'm going to try. So, when you buy one of these big ticket items like a building or a car or a computer, right? Or you buy a new iPhone, you know that the minute you take it out of the store, the value of it drops. That's what depreciation is. It's the annual cost of the wear and tear of the item, right? So it diminishes in value every year. And all of these items have what's called a useful life. A building has maybe a long useful life, 100 years, 50 years. A car might have a useful life of 10 years. An iPhone has a useful life of, I don't know, about 3 minutes precisely. So it diminishes in value at different rates depending on what it is. When you buy one of these items, because it's supposed to last for longer than 1 year, it's not an expense typically. You don't see it on your statement of activities all at once, but because you're depreciating it or dropping it in value every year, you put that annual depreciation amount on your statement of activities to spread out the cost of the item over its useful life. That's thing number one. And to save money for the eventual repair and replacement of the item. So that's what depreciation and amortization is. It's accounting for the wear and tear of items little by little over all of the years that item is supposed to last. It can
Okay.
get complicated. So, but that's your 2-second answer for what is depreciation.
Yes, that's a hard one. The next question: in what way would a board member use their time or cash contributions with regard to the organization's 990?
Oh, well, you could do several things. Number one is you could pay for a professional to complete your organization's 990. That's number one. If you are not a financial person, but you have the wherewithal, that is one of the wonderful things, is to have a professional complete some of this documentation, which might be your 990 or your state's annual charitable registration. I mean, maybe as far as an audit report, if your organization qualifies or has to have an audit done. If you want to direct your contribution in that way, that's something that would be useful to the organization. That's great. Or if you are a finance professional, it could be that you are the one, as your board service, you take on the responsibility of completing the 990. So either one or both of these things could be very useful to the organization, depending on your skills and what the organization needs.
I just wanted to go off that just a little bit,
Yeah.
Joanna. So we've got a question. This person represents a $1 to $3 million organization in performing arts. About what benchmark should that person be spending on an auditor for the required annual audit?
Oh, that is something that can be all over the map. And unfortunately, I don't know what an audit costs these days. I know when I was working directly for a nonprofit. So before my data arts days, and that goes back a long time, our audit cost about $8,000 for, I think, probably a similar size organization. And so it's probably more than that now. Audits are very expensive. They just are, because the auditors are doing a lot of service and they're doing a lot of work, and you're also paying them to be up on the latest standards for nonprofit accounting rules. You're usually also paying them to do your 990 and hopefully your state charitable registration. So you're paying for a bunch of services at once, but audits are expensive. So for that reason, it's good to budget for that. Ask your colleagues, what are you paying for an auditor? How much does it cost? I don't know about auditors in the state of Massachusetts, whether you're going to pay the same in Boston as you would in a suburb. I'm a little unclear about that. But unfortunately, audits are pricey. That is the reality of our world, because we also need them. There are legal requirements for when you have to have one. So that's the reality. And that's unfortunately why many people, many organizations don't have audits unless it's actually legally required. But know that it is a pricey proposition, and it's going to be several $1,000s. The larger you are, the more expensive it's going to be. But don't be surprised if it's somewhere between $5,000 and $10,000. And it's possible your auditor may give you a discount or give some services in kind, and you can always ask about that as a possibility.
Okay, we're almost at time. We've got 2 questions left, so we'll just
Great.
get through those and then we'll let everyone go. The next question is, if an organization is considering a fiscal year end change, how will this impact the budget approach or financial presentation?
Oh, it will have a great impact on it. And the biggest change is going to be year-to-year comparisons won't make sense for a while. So here's an example. If you have a December 31st year end and you decide to change for whatever reason you like to a June 30th year end, so that means you're going to have 1 year that's only 6 months versus the other years, which are 12 months. And when you compare, when you look at trends, the 6 month fiscal year, or maybe you could have an 18-month fiscal year, is just going to look weird next to the 12-month fiscal years. So the year that you make the change and the years on either side, the comparative data is going to be much less useful than after you've changed your fiscal year and have had, again, 12 months for a while. So that's just something to be aware of. But changing your fiscal year because you have a different seasonality or something else is important to think about. But you have to take a deep breath and dive in and just know that the comparisons are going to be meaningless for a little while. And you have to be ready to explain that to a grant maker or anybody external looking at your data, unless it's not apparent right on the statements themselves.
Okay, and I received 2 private messages when it comes to cost of auditor, so I'll just share that out.
Oh, good.
One person pays $6,000 for an independent review, and
Mhm.
another person pays $15,000, and this is a $2 million organization. And that's the full audit and the 990 and the state paperwork, the Form PC required in Massachusetts. So
There we go.
there's 2 quick benchmarks that just came through. Our last question before we go is, Joanna, can you recommend an entry-level book or a very basic financial management for the arts?
Oh, one particular book. There, this this is now going back some years, but there was one that I really liked, which was called Bookkeeping Basics for Nonprofit Managers. It might not even exist anymore, so there's that. But I will say there are lots and lots of resources online. I quoted a couple of things today. I don't usually do that, but I quoted something from Board Source, and the Wallace Foundation has a lot of writings about a nonprofit. They have a lot of essays, blog posts in different areas. So look around. If there are questions you have, you're going to find some good trusted resources out there, especially geared toward nonprofits. Whenever I do a Google search on a topic, whether it's deferred revenue or in kind or cash flow, I always include the word nonprofit in my search. So we sort of we weed out all the very businessy and for-profit concepts, although those can be helpful sometime too. So do some looking around, and on the Data Arts website in our knowledge base, which is just like a FAQ, we do have some other resources for accounting and some financial management guides. So you can look at that too. But yeah, do some searching out there. Bookkeeping basics for nonprofit managers was a good one.
Okay, thank you so much, Joanna, for today. As we close out, I'll just remind everyone that tomorrow you will get a link with this recording and all the resources that Joanna will share with you. I'm also going to link out, as I said, this was our third session out of 3. So I will link to you if you missed our first 2. Joanna presented. I know the chart of accounts was particularly fun for a lot of us bookkeeping nerds, so we'll share that out as well. And then when we get ready to announce our full Recover, Rebuild, and Renewal series, I will go ahead and email you that as well, since I have your email addresses. But in the meantime, please stay safe. We look forward to having you on future webinars with Mass Cultural Council, and really appreciate, Joanna, you taking your time for now the 3rd time in our series on presenting this very, very critical financial information to our field.
Thanks, everybody.
Thank you. Have a great rest of the day.